welcome to EastTV. I'm Sian Dowling, and today I'm with Eastern Partners analysts Martin Smith and Matt Windle to review what was in business banking for 2015 and looking ahead at what's in store for 2016. Matt, what did 2015 look like to Australian CFOs and treasurers?
Overall, it wasn't too bad. What we saw in business banking was that credit growth, while it ticked up to 5%, there were certain segments that were quite subdued. If you're looking at the institutional and the micro segments, they still remain net savers. So they're not borrowing as much and they're not spending the surplus cash that they have on hand. Mm-hmm. So from that, you can gather the opinion that they're a little bit cautiously optimistic in what their expectations are for the future. There are certain industries that are undergoing a period of growth. These are more export oriented. This is a result of the Aussie dollar coming off. It was a 10% decline from January 1st last year. So you're seeing industries like tourism and export-oriented businesses. They're having a massive pickup at the moment and taking advantage of that. On the flip side, our consumable goods here in Australia, they are hurting a little bit. Most of those are imported. And I guess it's a bit of a two-headed dragon, so to speak, in the sense that while their costs are coming under pressure, Australians will be turning away from internet and online purchases from overseas due to the fact that the Aussie dollar has come down. So it kind of nets itself out a little bit. But what will happen is margins will be compressed for those importers and more retail-oriented customers.
Yeah, well, I guess, looking back at some of the big banking predictions we had for 2015, earlier this year, we looked at credit demands remaining sub 3%. That didn't actually play out. We saw a big uptick at the end of the year, really driven by that middle market, particularly the corporate segment. SME export participation we expected to jump by 20%. That hasn't quite been reached, but we are seeing a slight uptick there from a segment which has predominantly been import orientated for a long time. So starting to come back to that. And online payments, we expected to jump by 30%. That's definitely happened in earnest. And really a look at disruptive FX providers looking to gain more market share from the Big Four. That hasn't actually occurred either. The Big Four cumulative market share in spot FX has remained almost exactly the same at about 83%. And where we've seen advances by, say, Western Union across the board, providers like OzForex, now rebranded as OFX, actually experience customer churn. So, yeah, a little bit of a moving, shaking there going on if we look back at some of our predictions, yeah.
Well, and looking forward, Marty, what are some of the big business banking predictions for 2016? Well,
looking at trade finance, for example, it was quite a tough year, but free trade agreements that we're seeing coming through there, particularly CHAFTA, set to really play out well. China is nominated as a top 3 import and export geography by up to 2/3 of all instos and half of all SMEs. So it is a big focus. But what we found was awareness of the benefits is very low, particularly amongst SMEs. So some of the benefits there will probably take longer to play out than hoped. And on a product focus, we find that the areas of highest importance are still received with the lowest satisfaction. So even though instos are after more general trade advice, that's where the lowest satisfaction ratings are reached. Corporates are after better value for money. SMEs often just want a bank trade account officer or better pricing competitiveness, but all those areas aren't being met. Among the Big Four, they're starting to look beyond themselves and looking at other competitors. So disruptors and in areas outside of online lending and payments, we're going to start to see the emergence of non-bank competitors. So really it's a case of they had enough competition amongst themselves, but with ANZ moving on from CEO Mike Smith to Shane Elliott, CBA looking to really lift that business lending element to I guess balance against their quite large residential lending mortgage portfolio, NAB pulling out of the UK, really looking to get the Aussie business going again, and Westpac looking to advance that digital transformation. There's a lot going on among the Big Four, but really a lot of their, biggest challenges are coming outside of their own grouping there.
I think on that CHAFTA point that you mentioned with the trade finance, what we will see also is the use of the RMB. It's been up over the last few years, not just here in Australia, but throughout the world as they've set up the hubs to trade, so the authorised hubs for RMB. But just recently, the RMB has been included in the IMF's currency basket. So that's going to increase the prominence of the currency as well. And I think the players that can get that right, and I think ANZ's probably well positioned here in Australia with the retail presence that they've got in China. Whoever can get that right will have a massive advantage leveraging off of this chapter agreement once it gets settled down and starts to work its way through.
And finally, what's the one strategic focus that's going to separate the winners and the losers going forward?
I think this year it will be the bank that can best manage the Basel IV Accord that's due to be implemented in 2016. It's going to change the landscape, especially from a funding and also a lending perspective, changing how they're risk grading their customers in order to achieve this balance to fall in line with the Basel Accord. This will flow downhill into the customers, so they'll start to reevaluate how they're lending to their customers and being very particular, especially in the early days while they're trying to get their head around exactly how it works. I think the biggest fear there will be that rather than going to the bank to borrow, especially in this institutional space, which I mentioned earlier, they're net savers. They'll end up using their surplus cash to fund their activities rather than borrowing, which they would traditionally do. If we do see that, it will get quite prickly for the banks. With deposits, they're about 60% of the total funding piece for Australian banks. If you start to see more businesses using their surplus cash rather than borrowing, where are they going to get these additional funds from? That would be my major concern for 2016.
Yeah, I mean, further to that, it's a case of doing more with less. It's about being creative with how the banks are run and how they take on competition from both within their own banking group, but also non-banks. So, for example, Westpac, instead of cutting branches, just reducing the size of branches or consolidating there. So, really, some of the challenges they're facing require creative or new responses. And with that in mind, outside of the Big Four, we see Bank of Queensland as a really strong competitor this year. They score very strongly according to our sentiment indicators, but they have a mindshare challenge. So it's a case of having more people know that their customers are very happy with them across lending and other transaction banking products. Within the Big Four, despite not having, the best year, we still see ANZ as a really strong proposition. Obviously, a lot of their success is dependent on a pickup in commodity prices and trade flows. But in terms of that trade finance piece, ANZ's positioned really well. And really one of the big key focuses there is back on traditional transaction banking, looking back at the core underpinning for the business banking relationship. And we're seeing more businesses go to their bank on a transactional footing as opposed to looking to source credit. And that's, a function of a number of things, but really it's a case of getting that proposition right.
Great. Well, thank you both so much for your time. Join us next time for a further wrap on 2015 and an outlook on 2016.